Hello traders, welcome to another daily analysis. Right now we are already into Tuesday, about in an hour before London opens, but I'm gonna do a recap for Monday, February 6th, and then we can go over to see what's about to happen, most likely to happen in the next London session. So today, Monday, was a usual Monday with no tier 1 data. Market was very quiet, and all the way until London, New York session, everything was very quiet. The only catalyst actually came in after the Asian session, the one we just had. We have the inflation expectation quarter to quarter for New Zealand and the cash rate RBA rate statement from Australia. Now, the inflation expectation from New Zealand was quite positive. Actually, it was very a big surprise, and we saw a surge into New Zealand dollar. Now, prior to this, the bigger context, New Zealand dollar already enjoyed a quite nice momentum from the previous higher inflation report, also from the previous GDP data. So the only thing that's maybe a little bit downside was the soft employment data. But even that one was okay because it's soft. It means it's less than expected, but it's still better than previous. Also, you have to look at the context of what was the biggest worry for RBNZ, for the Central Bank of New Zealand. The biggest worry was the inflation. And that's why every time you have inflation-related data from New Zealand, it's always gonna be a more important. And that's what happened today. The inflation expectation came in as more than last time, better than last time. So we saw another huge buy into the New Zealand dollar. So really, that put New Zealand dollar right now in the strongest currency. Remember my weekly outlook, I was saying that my favorite currency was New Zealand dollar. And right now, today, it's even further confirmed. So back then, I suggest people to wait after RBNZ statement for this Wednesday and Thursday. But right now, I think this inflation report pretty much removed any rate cut possibility for RBNZ. So most likely, the RBNZ rate decision is most likely going to be unchanged, and even a statement, even a press conference, pretty much not going to provide too much volatility, because this report is really important. And right now, the fundamental picture for New Zealand dollar has complete. Of course, there are still downside risks for the employment data, and the core inflation was still kind of soft. But just currency market, it's a comparison, right? You compare one country to another country. So just in the comparisons perspective, I do think New Zealand dollar is really the strongest currency right now. Now, of course, what comes second is again Australian dollar. The RBNZ statement is, I personally think it's quite neutral, but people do find a little bit positive notes from that statement, mainly because they actually expect the next GDP to be better. So they were saying that they're saying that the next GDP should revert back to the usual area. Let me say they actually acknowledge the last GDP contracted 0.5% was a miss, but that's not a norm. So basically, the Central Bank of Australia don't think there is really a big issue. They think it's just a seasonal, a temporary thing. And because of the Chinese sector continue to grow, the commodity price continue to go up, they do think the GDP will revert back to usual. And that means they are quite positive for the outlook for Australian as well. So that, of course, Australian had been a strongest currency since 2017. I know it's only been 2 months, but it is what it is. Australian dollar had been really strong. So now, since after the statement, it pretty much removed any downside risk for now. So that put Australian dollar back into the rising star. And that's pretty much the main catalyst today. The market was mixed. You have a positive equity in Asia, but end up negative in New York. Another catalyst was Eurozone, which I don't think is really a catalyst. However, market did react to that. So what happened is Le Pen, one of the French candidates, officially launched her presidential bid. Now, many of you know she is a frank exit opponent, so she does want France to leave Eurozone. So of course, if she wins, which most people think is not going to happen, but if she's taking lead in any kind of poll, it's always going to create a lot of panic into the Eurozone. And that's what happened today. She actually launched her presidential bid. That's it. That's all she did. But that already caused a lot of panic into the European market. Now, what happened, I think, is just re-emphasize the geopolitical situation in Eurozone. Because yes, the January, we do have a lot of fundamental data that are quite promising for Euro. People seem to have a shorter memory. They just forget that fundamental data are not the driver for Euro for this year. What's really going to drive the market for Euro is the political situation. So today, Le Pen officially launched her presidential bid. This really just sort of awakened people's memory to realize, wow, really the French election is the biggest catalyst in April. And in September, you're going to have an election in Germany. So these two are the major catalysts for 2017 for Euro. Now, what's going to happen? We do think, election prior to the actual voting, you're always going to have a lot of political battles. So I think between now and then, there is going to be more and more pressure build up for Euro. And of course, that's going to cause it into the downside movement. Because of that, of course, the money has flowed into the safe haven currency for today. And Japanese yen and Swiss franc, I do think Japanese yen and Swiss franc actually could be quite positive for this week. Because right now, the re-sentiment is not only from Eurozone, you also have the court decision for immigration ban coming out on Tuesday for US. So the US president continue to be a negative sentiment right now. So right now you have that plus the European election negative sentiment plus the Brexit sentiment. I do think the market is quite volatile. It's very vulnerable at this moment. So Japanese yen and Swiss franc might continue to enjoy an inflow benefit. Also to note that if France, for whatever reason, Le Pen wins, the panic is going to be way much larger for Euro. The reason is because it's going to be really a structural damage for the Euro. Back then, when Britain left, it is a shock, but don't forget, they don't share the same currency. And Britain has already been quite in a sideline, ever since they joined the Eurozone. So they're leaving Euro. It's of course, it's not a good outcome for European nations, but the damage is more narrow to UK itself. On the other hand, if France really leave Eurozone, that's pretty much the end of Euro, I think, because France is such an important member for Euro. If they decide not to use Euro, there's really no point to have Euro at all. But that will only happen if Le Pen gets elected, and that will only happen if she's taking lead in the poll. So now you understand why people are getting panicked, because they sort of, you revert back to what's about to happen in the future, and really now her launch, the presidential bid, is the beginning. And ever since Brexit and Donald Trump, now people are not certain about this kind of outcome anymore. Nobody can really say with 100% certainty that, France, the election will not, Le Pen will not win. Nobody knows. So that's why the panic will slowly to build up, and that's going to be a pressure for Euro. For British pound, the parliament finished the debate, and of course, as expected, the outcome is favor for Prime Minister May. Now she can finally trigger Brexit. Now this again, it's the same scenario as Euro. Nothing new, it's not a surprise, but somehow it reconfirmed some people's nightmare that it is going to happen. It's happening. And because of that, we also see some pressure into British pound, because right now what lies ahead of UK is a lot of uncertainty, a lot of unknown, and that definitely going to hurt the economy. For a lot of company, you now have really 50-50. You have 50% of company actually taking this advantage to invest in UK. You have another 50% of company are going to leave. So that's why I back then I say it's a neutral currency, because some people will think this crisis actually is a good opportunity, because they still have a faith for UK. And UK, by and large, still enjoy at least the geographical location. They are still a very nice location for any company to do business in Europe, in Euro area. So and they are still an English-speaking country. So that's really the benefit. They also have large history of trading, not only like financial trading, they have large history of actual trading. So these are all a benefit, a historical benefit for UK that is not going to be eliminated. So that's why you do have a bigger corporation actually invest in UK, taking advantage of the devaluation of pound. So it's not that negative like the end of the world, but as for now, because the pre-exit is going to happen relatively soon. Again, when we are approaching that market, is going to be a little bit panic, and you're going to see a little bit pressure into pound. So because of that, we also think British pound is quite in a negative sentiment right now. Another thing is that we have the BRC sales number. It's not a tier 1 data, but what's notable is the sales number continuing to go down. And that could be a reflection for inflation has slowly reflected in the consumption. And as I mentioned, Bank of England kept saying that if the consumption slows down, they will have to cut the interest rate. And that, of course, will make British pound even worse. For US dollar, no major catalyst, but we still have this battle between the White House and federal judge. That's pretty much going to be a headline right now for US, all the political drama. And the sentiment, of course, is still looking to the downside. Pretty much all the investment banks, all the hedge funds are not going to buy US. Basically, people are standing in the sideline right now to see what's happening right now for US. And unless they have a clear political situation, you're probably not going to see a huge amount of money flow into US dollar. For Canadian dollar, on the other hand, it's a down day today due to a WTI oil market lost a little bit ground. But for oil market, for Canadian dollar itself, it's looking quite positive for me, I think. And the reason is because you start seeing a lot of hedge funds start going to a futures market to buy oil. So right now, and the reason is because after January, remember back in December, OPEC made agreement, but market was very, very speculative. Nobody think, market is very, market is worried basically. They have a lot of doubt. They don't think OPEC is really going to meet their target. So that's why you don't see a much futures position build up in January, because a lot of hedge fund and a lot of smart money are waiting on the sideline. After January, we have reported that OPEC really are curbing the output. They actually met 80% of their target. So right now, people a little bit regain the confidence knowing that, okay, OPEC is really cutting the oil output. If they are doing that, then the oil price is going to go up. Then because of that, we do have hedge fund build up a lot of futures position into the oil. And that, of course, is going to boost the oil price up, and hence it's going to help Canadian dollar. On top of that, Canadian dollar, of course, Canada itself does have a good GDP data last week. It does have a good labor market. It has an okay inflation. And back then, Bank of Canada they had a neutral stance, right? Back then, they were saying they are not going to do anything until 2018. Of course, ever since Donald Trump gets elected, and ever since the renegotiation of NAFTA came to the table, right now Bank of Canada slowly changed their position. But because we also think the NAFTA deal is not going to be a very negative outcome, so nevertheless, with all this micro element, we do think Canadian dollar is also still a pretty good currency to buy. And that goes same thing with Australian dollar and New Zealand dollar. These three commodity currencies are really the only good currencies to buy right now. Three of them all have a quite strong economic data. Three of them are all outside this kind of geopolitical turmoil. None of them have unstable political situation. They are all pretty stable in terms of their politics. The fundamental data continue to be well, and now since 2017, we do see an expansion of commodity price and manufacturing from China continue to grow, even though it's slowed down, but continue to grow a little bit. So that's why these three currencies, in the fundamental perspective or sentimental perspective, are pretty good buy right now. Canada will have the employment data again this week. Again, that will be a boost or not. So we'll have to see what's happening. New Zealand dollar right now is really, really good, but a GDT price is coming out tomorrow. That could be a boost further, or it could maybe preach a little bit, but it's not going to really tank or sink it. So by and large, New Zealand dollar is still a very good buy, same as Australian dollar. And then finally, we come to Japanese yen and Swiss franc. Both currencies are fundamental neutral. Really, there's no news coming out, but sentimentally, they are quite bullish for this week, or even for, I think, February, March, and April. Because it really, if you want to trade Japanese yen and Swiss franc, you just look at the political situation for the world. And if you think it's going to get worse, then that will be more money flowing into it. And because of the French election, it's coming up in April, we do think the Japanese yen and Swiss franc will be beneficial for, up and down of the sentiment for the upcoming weeks, or even for this week. So let's take a look at our currency. So far, I don't have any major currencies right now. I didn't have any positions for Monday. It was a quiet Monday. So let's take a look at the daily chart. Just give me 1 second. All right. So take a look at Euro first. Now, Euro, as mentioned, because of the panic into the election, French election, you have this kind of huge downside movement versus safe haven currency. Now, for me right now, yes, this is a good candlestick, and you can definitely sell it, because I do think this election turmoil will continue. The only thing you have to watch out is, of course, you are at quite low area. So, really, the recent low is just right at 1.06. And Euro Swiss also have a very low daily range. So that's something you have to take into consideration. Again, as I mentioned right now, I don't really recommend people do daily trade, just because the market is too vulnerable for these external factors. So you either do a weekly trade, or if you see this kind of daily signal, maybe you go to hourly chart to find a better entry. But just in terms of direction wise, I do think it's going to keep going down for Euro Swiss. Euro dollar is something I will stay out, just because both currencies are really clueless about the future direction. Euro Aussie, of course, is another downside movement, same as Euro CAD, Euro New Zealand. All pretty good to sell, but you need a signal. Now Euro New Zealand broke this 1.46, and now it really looks like it's gonna close below. We'll see what happens tomorrow if this one can become a kangaroo tail. If not, then it means that Euro is really in big trouble versus New Zealand dollar. And of course, the low is here, but still, it's a very significant movement for Euro. Euro Yang is again not a bad currency to sell, because of the current sentiment. Again, you just have to know whether you're willing to take the risk of selling at a low area. But in a fundamental or sentimental perspective, it does look like it's gonna keep going downside. So that's something you have to take into considerations. For British pound, on the other hand, you don't really have too much significant movement. It's because I can only say that I think the panic is not building yet, but it is going to come, that's for sure, especially when the negotiation starts. So once the negotiation starts, you will expect to see pound going lower. But right now we don't have any movement or any signal, so we're just gonna ignore it for now. For a daily perspective, Swiss franc, Japanese yen, not really something I trade. Dollar Swiss. Now, as mentioned, US dollar is not something I trade either. If I want to do anything, I'm maybe even going to the downside. So dollar CAD, I'm looking to short. Dollar Swiss, also looking to short, maybe in a downside movement. But right now, it's really just in a kind of range area. Dollar yen, I'm also looking to short, actually, at this kind of intraday or daily movement. But you gotta watch out 110, it's going to be very significant in both sides. Once it can hold, it's gonna go up a little bit. But if it breaks and close above 110, then it's really looking to the downside. And don't forget, back in last year, we actually had, at 100 level. So I was trading at 100 level last year. I actually witnessed intervention because it happened very, very fast. You have huge movements suddenly without any catalyst. That most likely is a sign of intervention from BOJ. So 100 is something that BOJ might intervene, but other than that, they're pretty much not going to do anything. So that means if they're not going to do anything, and if this thing can definitely drop 1,000 pips, that's no problem for dollar yen to drop that low before the Bank of Japan intervene. On top of that, you have Prime Minister Abe meeting with Donald Trump, I think it's next week. That's going to create another basically volatility into the market. Donald Trump had publicly attacked Japan for their currency manipulations, and we also saw a lot of BOJ or Japanese official came out these few days, ever since that comment, basically kept saying that they are not manipulate currency for the benefit of trading. But the truth is that Japan needs the currency to be at a very low level. And that's why politically it's going to be an opposite view. So we do think dollar yen can keep going lower and lower. We will see what happened to 110. How does it hold up? Now, Aussie dollar is again continue to be quite strong. Aussie Swiss continue to, we don't have a signal today, but Aussie dollar will be a better buy. And as I mentioned, you could use this as an inside bar signal to see if you get feel. But in the shorter movement, it does look like it's gonna go into the upside. Aussie CAD is not something I touch, same as Aussie Newsy, just because they both are quite strong. Aussie Newsy, you might, back then I was saying that, we might reach to 1.0550 before we sold off, and we actually didn't even touch that. We immediately dropped down. So it is the fundamental fact is that New Zealand dollar is the strongest currency right now. So when Australian dollar, it's good, but it's going to lose the battleground versus New Zealand dollar. Aussie CAD, as I already gone through that. Aussie yen. Aussie yen is another currency that normally you can buy, but because the negative risk sentiment right now, you also see a lot of strength into Japanese yen and Swiss franc. CAD Swiss and CAD yen. New Zealand dollar, New Zealand CAD, New Zealand yen, and New Zealand Swiss. So right now, again, if you, I would suggest you to trade in a weekly perspective. And if you are trading more like a short term, right now the buying is really with Australian dollar, New Zealand dollar, and Canadian dollar. Occasionally you can do Japanese yen and Swiss franc, but it really depends on what happened to the market. So you have to take a look at equity and bond yield. The short sale, a bear, is really with US dollar and euro and British pound. These three are more likely to go down than other currencies. Because this week is not really a risk event week, we don't really have much data. So pretty much the sentiment might be the main driver. And that's why it will go with whatever happened, especially in the politics. So that's something you have to take into considerations. So right now, that's pretty much it for me. I am I liked the Euro Swiss and Euro Yen trade, but because they both are very low already, so what I do is I go to maybe hourly chart and just to see if I have any sort of good signal to get into it. And I don't want to get into the lower also, so maybe looking for something like big shadow in hourly perspective to trade if I have it. Now let me take a look at PV point. You are pretty much near this 119 handle area, right? 65 pips to go. So ideally, if we can have a little bit of retracement later on in the London session before we continue to go down, that would be the best scenario. If we keep going down, then I'm not interested to get into it because I just don't like to sell at this low area. But by and large, it is going to go downside. That's the movement for Euro Yen and Euro Swiss, I think, for the next session. Okay, and last week, as I mentioned, I got out of Aussie dollar. Really was a pretty good decision because we never really touched 0.77 again. Pretty much it was a downtrend movement until New York session. You have uptrend, and then you have a downtrend, and then you have uptrend just because the RBS statement right now. So really, it's a sort of a range area. And dollar yen, we also got out last week with a very good choice because we actually broke lower more than 112. So it's significant, and now it does looks to go downside. So that's pretty much what I have right now. I know it's not much, but again, for people really not looking to be too active, I would really recommend you to do something like weekly trade. It's already taking off already, so weekly will really be a pretty nice strategy. Otherwise, you can do hourly or even lower than that, or 4 hours, things like that. But for this week, will pretty much be a sentiment-driven week. Okay, so guys, let me know if you have any question. Otherwise, I'll be back tomorrow with another daily analysis. Thanks for watching. Bye bye.